Welcome back to Midcap Radar. Well, some selling pressure emerging in the last 15 minutes of the session, but MTAR Technologies is the next management on the show. The company reported a stable set of Q2 numbers. Revenues came in healthy while EBITDA margin contracted on a year-on-year basis. We have Parvat Srinivas Reddy, the Managing Director and Promoter of MTAR Technologies with us. Good afternoon, Mr. Reddy. Thank you so much for joining us. First up, when we talk about FY25, the guidance, at the start of the year, you had given a guidance of 30 to 35%, which was earlier trimmed from 40 to 45%. So at the end of Q2, which is sequentially much better compared to Q1, where does the guidance stand, both on the revenue as well as margin front? We understand you had given a guidance of 22 to 26% as far as EBITDA margins were concerned.
Yeah, so we had mentioned that we'll do 30 to 35%, but we looked at more closely for this year, and we said we should be around 725 crores of revenue for this year with about 21% EBITDA margin. That's what we're looking at.
Okay, so that means there's a further cut. You will be able to do around 25% of revenue growth with around 21% margins this year. But Mr. Reddy, halfway mark, you're absolutely flat. So are you saying second half you'll be able to achieve the rest of that 25% revenue growth guidance? What will be the driver for that? What makes you so confident?
No, we have a lot of projects which we are working on, both in the nuclear and the aerospace sectors, and the kind of forecast we have been given for the clean energy as well. So looking at all that, we are pretty confident of having a better second half than the first half. We have caught up with the momentum right now with Q2 as well, and we should be able to achieve the numbers what we're saying as a guidance of 725 and 21% EBITDA. And also, the reason for 25% is that we are working on a lot of first articles, qualification processes are going on. So we're looking at all this for the future growth for the next year as well. So we are focusing on the future for the company in terms of various products that we are realizing in the current year, which will add to huge volumes for the next year.
Mr. Reddy, order inflows this time around, they've gone up by almost 250 crore. But what's a little concerning is the fact that the order backlog has actually dropped a little over 5.5%, coming in at around the 940 crore. So are you saying in H2 you are expecting to see some significant order wins coming in? And when we talk about Bloom as well as Fluence, last time you had mentioned that there are some significant orders expected from them. So what is the status on that?
We are expecting significant orders from Bloom in this quarter itself. And also, if you remember, we said we are expecting more than 500 crores plus orders from nuclear division as well. So these are expected in the second half of the year. So we are looking at, once these orders come in, and also from the MNC aerospace business, we are looking at close to about 1,400 crores of closing order book by end of this year.
Okay.
So expecting another 450 crores worth of order inflows in the second half of the year. So Bloom, can you quantify the the quantum of the order that you're expected from Bloom? And Fluence, you said around 400 crore. Is that accurate?
No. What I've said is that Bloom would be around 200 to 250 crores of additional orders coming in. Apart from that, we can get more than 500 crores of orders from the nuclear division. So net off, by end of this financial year, post the sales, we're looking at about 1,400 to 1,500 crores of closing order book for FY25.
Okay, so that will be the order book. Can you give us a sense of what the split will be like? How much is going to come from clean energy, say, in the next fiscal? Because that continues to be the big focus point for you. And in that case, would margins change? Mr. Reddy, you spoke about this year, but if we take it forward to the next year as well, how much would clean energy contribute? How much would come from nuclear? And are these high margin segments for you?
Yeah, next year, as I said, we are sequentially, the margins are improving quarter on quarter basis, and we should move to a level of, for the FY26, we should be looking at about 24% margins plus minus 100 basis points. And clean energy would contribute in the revenue segment around 40 to 45% because we are growing very rapidly on the aerospace division and the nuclear division as well for next year.
Mr. Reddy, you did allude to nuclear energy. You did allude to the fact that you're expecting to get a few orders there. What has been the execution as far as that particular segment or that particular vertical is concerned? When does that start contributing as far as the top line is concerned?
I think majority of the execution would start from next financial year. And to top it, whatever existing orders we have for 140, 150 crores, we also expecting, as I said, close to 500 crores worth of orders. So it would contribute a lot to the top line moving forward from FY26.
Okay. All right, Mr. Reddy, we take that point. Thank you so much for joining in today with that take and what the outlook is looking like. Positive outlook, but yes, the guidance has been cut on the revenue growth and margins this time around as well. By the way, just a while back, there were important flashes at the bottom of your screen. Sources were suggesting that the Department of Telecommunications, it has floated a draft cabinet note seeking bank guarantee waiver for telecom companies, and it is for spectrum, which has been acquired prior to 2022. And this is something that a lot of these companies had spoken about as well. Vodafone Idea definitely will be in focus on the back of this. The stock continues to be under pressure. Bharti Airtel is absolutely flat with some negative bias right now, but Vodafone Idea continues to be where it was, down 2.5%. But of course, we'll get you more updates on this story. For now, we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.